Welcome back to Squawk on the Street. My next guest runs the largest event-driven hedge fund on Wall Street. And if you've been listening to him over the last couple of years, because he's joined us twice, well, you would have made some money. He's Matt Halbower of Pentwater Capital, $7 billion in assets. I'm referring to actually the two times you've been here, Matt. Once was when we discussed the possibility of the close of the Twitter acquisition. You were very bullish. You were right. It closed on terms. And the latest time was back in August, amazingly enough, almost a year ago, when you said the U.S. Steel deal with Nippon would close. And it did. It did at 55. Yes. I don't know if you've ever been through anything quite like that, because I'm sure there were plenty of days when you very much doubted your prediction on August 1st on this air that, in fact, it would close.
Well, it was actually very important to me because I came on your show and told everyone that I thought it would close, that it did. And so that actually made me work harder. I spent so many days in Washington, D.C., meeting with senators, meeting with people in the administration. And I'm just thankful that eventually everyone saw the tremendous benefit that Nippon would bring through their $14+ billion of investment, particularly to Pennsylvania, so that the deal got done.
Yeah, and you were a believer along that. Now, I don't know that we've ever seen a golden share provision. That seems to be something somewhat new.
It's borrowed from Europe. In Europe, you'll sometimes see golden shares for national champions, but no, never before in the United States of America. This is brand new here.
Obviously, you were the largest holder of U.S. Steel for some period of time, weren't you?
For at least the last year, yes. We had an economic interest of well in excess of $1 billion of U.S. Steel.
All right, and you've had a very good year performance-wise, certainly is my understanding, and I mentioned your asset size at $7 billion. So the question now is, given you're 2 for 2, I don't know if you're going to be able to go 3 for 3, but let's go through some of your large positions. I know one of them is Fannie and Freddie. And again, we're in the realm of the government here. We're talking about the possible privatization. Obviously, the president has made comments about this. This is a sort of a widespread expectation. You own the preferred. Bill Ackman, for example, very notable hedge fund manager as well. He's been talking about the common stock. Why do you own the preferred, and why do you believe that is going to be a beneficiary of the so-called privatization, which really means returning them to the public markets?
So, David, Bill Ackman and I agree on almost everything about Fannie and Freddie. We agree that President Trump and the Trump administration is going to release them from conservatorship and allow them to be relisted and be public again. We just disagree as to the best way to invest in that. He thinks that the common has more ability to appreciate than the preferred. I think the preferred has more ability to appreciate, and I actually think there's risk in owning the common.
And what is the risk in owning the common, in your opinion?
Well, technically, the government right now owns a senior preferred instrument that is marked on its own balance sheet. And I actually didn't know this until I started to invest in Fannie and Freddie. But the United States Treasury has a balance sheet. They publish their balance sheet, and they mark this senior preferred as being worth several $100 billion. Now, Mr. Ackman thinks that the government should just take that and rip it up, and I agree in many ways, because the government lent Freddie and Fannie about $190 billion. They were repaid over $300 billion.
And the dividends that have been paid back to the government as a result of the ownership of those said entities.
Exactly. But there's a legal impediment. If there is actually an asset on the balance sheet, it is very difficult for the government to just rip it up. This was an issue during the previous Trump administration number 1, and there was quite a bit of work done then to try to remove Fannie and Freddie from conservatorship. And the previous Treasury Secretary, Steven Mnuchin, actually, I believe he had a plan to deal with the legal impediments of simply ripping up that senior preferred. And his plan, I believe, was to convert it into common. And they had a nickname for it at the time. They called it the Mnuchin dilution solution. And if I had to guess today, my guess is that's what's going to happen, which is why that common actually has some risk.
Okay. So in your opinion, obviously, if in fact they go the Mnuchin dilution solution,
Fun to say.
you dilute the heck out of common holders, and therefore that puts them at risk.
There will be dilution if things go the way I believe they will. I don't know how much dilution. I just think it's important for investors to realize that this is not a riskless investment because there is in my mind, a relatively high probability.
Whereas the preferred gets paid out.
I believe so, because if you convert the government senior preferred into common, then the junior preferred should remain intact, and that, in my opinion, makes that a better investment.
And you do believe that they will privatize Fannie and Freddie prior to the end of this current administration?
Oh, absolutely. President Trump has posted Truth Socials twice about his intention to do so, and in fact, back, I think it was in 2022 or 2023, he wrote a letter where he talked about how the government taking Fannie and Freddie in conservatorship and then refusing to ever release it was tantamount to socialism and stealing from investors.
All right, let's move on in the time that we have. That's obviously a more than $1 billion position at Pentwater, I believe, correct?
We have $1.3 billion face of Fannie and Freddie preferreds.